Mark, one of the big issues for accountants in 2021 is going to be strategic planning for their clients. What do you think accountants should be doing to assist clients in this area?
Yeah, great question, Pete. I think one of the greatest challenges coming out of COVID is the ability to try to get clients back on the straight and narrow.
Yeah.
And by straight and narrow, what I'm talking about is having a session with them and talking about where they are today, where they want to be tomorrow, who's going to get them there, when's it going to be done, what date is it going to be done, and developing accountabilities around it. In other words, what I call strategic planning. I think there's no better opportunity. If I was in practice, what I'd be doing is looking through all those clients, Pete, that qualified for JobKeeper 1, I call it 1, 2, 3, and then not necessarily would get 2 or maybe still get 2, but might be struggling big time to get 3. And I'd be sitting down with them and having a cup of coffee. That's what I'd be doing this side of Christmas and early next year, having as many cup of coffees as I possibly could. And I'd be talking to them about their strategy. I'll be talking to them about how they're going to get that 30% back that they would have had to be down to qualify for JobKeeper.
Yeah, that's right. Yeah.
And I'd be talking to them about their business and their vision and their mission, their values. I'd be, ultimately getting them to do a bit of a SWOT analysis for me, where their strengths, weakness, opportunities, and threats are. But I'd be using that as a catalyst to be able to develop systems, processes, resources to help them get back on deck. Help them get back to where they were before COVID, and then ultimately grow and flourish in the future. I think the old advisory service, so let me make you more money, more profit, more cash flow, make your business better, is still important. But it's not as important now as recovery services around how do we get back after a global pandemic, which in some cases has totally shattered many businesses.
Oh, that's right, especially those in tourism, hospitality, tours, obviously the airlines. But one of the other issues I think it's going to happen out of all that is that a lot of SMEs might find that their debtors have blown out because they haven't been vigilant in their monitoring of debtors and calculating debtors days outstanding. Think accountants should be looking at this as well?
Absolutely, Pete. I think if small business owners have great debtor management at the moment, then mount them in gold and put them on top of the Sydney Harbour Bridge. I think if they have concentrated on that at the time where income isn't coming through the door, fantastic. But I also know that many haven't. And the reason many haven't is because they're not conditioned to be a good debt collector. They don't like doing it. They begrudge that process. If we look at the single biggest reason for cash flow in small business land, it's debtor management. If we look at what's been increasing over the last 5 to 10 years, it's the number of days on average that it's taking small business owners to collect their debts.
Yeah.
And many of them fail to be proactive enough, fail to prioritize it enough, and also aren't aware of many of the systems and processes that are available to help them better manage their debtors in a procedural fashion moving forward. I think accounting firms should be focusing on this particular strategy as part of their strategic planning work with their small business owners. I really do.
Yes, and as you know, at ESS BIZTOOLS, we've developed a product package which assists accountants to give that advice, so they don't have to reinvent the wheel. It's there. They can start utilising it.
One thing I know for sure, Peter, is accountants don't like reinventing wheels. You can get something off the shelf and put it into place simply, easily, get the right people in our practice managing that particular function, and not just for small business owners, but for us in our industry. We know that what kills an accounting firm cash flow is lockup. Debtors whip. So strategies around that and helping manage it and mitigate the consequence of it, I think, are very, very valuable.
Another big area I think for accountants to be looking at as part of developing the strategies is the investment in stock or inventory that a business has. And this is going to be probably fairly difficult at present. We're coming into the Christmas New Year period, and some of their clients may have also had trouble getting stock because of the problems with China and other countries in the supply line. So there's plenty of challenges there also, isn't there?
Oh, there is, people. It's not just COVID. Any retail-based business that doesn't stringently manage its inventory is losing money. We know that. The longer stock sits on the floor, the more it costs you. And I don't think we measure that well enough in small business land, let alone as accountants helping our clients and advising our clients. I've done a lot of work with the golf industry over the years.
Yeah, I know. Yeah.
A love for golf. I also know that when I walk into a golf pro shop, there's so much stock that's sitting there that's probably over provided. That's been sitting there for far too long. I don't think retailers understand what I call the top five, and that's the top five winners and the top five losers when it comes to inventory management. You know, what are your five champions and what are your five horrors? Because the champions, you want to keep them moving. The horrors, you want to find and fix them fast. So I think, I think inventory management as a cash flow consequence and a best practice management doesn't change and will never change irrespective of COVID and everything else. What I am seeing out there in the broader market is many suppliers struggling to be able to provide stock in certain industries. I can talk personally about this one, Pete. The guy that looks after my gardens, and let me say as an accountant, I'm not a gardener. Please, if I was, I would have become one. But he was telling me the other day that trying to get quality plants from the nurseries at the moment is a major challenge.
Right, okay.
Because of, undersupply of quality. He said you can pick up a lot of stuff that probably ain't going to last that long, but if you want to put something decent in there, it's really hard to get it. And I think when you look around at particular industries, it is a challenge. I was talking to a client the other day, an old client, who's in the glass cutting glazing business. And he was telling me that he's never had, the last 6 months have been phenomenal. He said he's never done as much work at people's homes and not commercially than ever before. You know what he's telling me he's worried about? The next 6 months. Because if all that work has been escalated, drawn into this year, because people at home are starting to think, that needs fixing, I want that done. He's been putting a lot of dog doors into glass, stacks of them, because people at home are noticing those things. But, the challenge for him is how he sustains that income moving forward. And I think one of the challenges for other businesses is how they sustain their model moving forward, Pete.
Yeah, but this then requires the accountants to have that understanding of what's been happening in their client's business. They've got to go beyond the figures. It's just not a figure called sales. What comprises those sales, the sort of thing you're just talking about? Has it come out of a new source of income, which has been domestic market, that might not be there in 2021?
Pete, I've been doing advisory for a long while, 25 years. If I have a client that comes to me with a set of financials, and largely, let's be frank, our practice just did it that way because that's the way everybody did it, one line called sales. Even if they're carrying inventory, it's sales less cost of goods sold, opening, purchases, closing, bang. And we then comply with the ATO. That's what the word compliance is. It's a wonderful, profitable thing. But it doesn't help advisory. I need to know at least your top 5 sales lines. I need to know at least your bottom 5 sales lines, your top 5 buy lines, your bottom 5 buy lines. And that's only 5. I'm only talking 5 to make it easily digestible by the client. I can't help a client on one line called sales. Even that figure perfectly articulates to most of the dashboard software in the market at the moment. You can't get away with long-term advisory engagements working off one figure where one line is up, the other line is down, but they're equally it's important to the business owner. We've got to be more strategic in that space.
Yeah. Yes, I'm noticing there's more interest from accountants who are talking to me about the products we got available in analysing the retail product mix with markups, because accountants have got to realise that sales figure comprises a whole range of various products, could be 20, 30 in some retail businesses that have got various markups, and anyone can sell thousands of dollars of the very low markup item, presumably, but that's not going to help you much in generating enough gross profit to be able to pay the overheads and earn a profit for the business, is it?
No. And every accountant out there knows that it's all about balance. You've got to take a hit with some of your key lines to get people through the door, a la pharmacies, a la fuel stations. But where do you make your money? You make your money in the associated lines that are probably non-conventional.
Mm.
Now, we were talking about the golf industry earlier, Pete. Well, you're not going to make your money out of golf clubs and golf bags and golf shoes and golf buggies.
Mm.
The majority of golf pro shops make their money out of food and drink.
Mm. That's right.
You know, necessity purchase.
Mm.
So understanding those key metrics. So I've always been about understanding the key metrics in your business and then knowing what levers to pull and how hard to pull them to create success, but knowing it before I do it.
Yeah, well, this gets back to the charts that Andrew Geddes and the team at FMRC produced years ago, looking at what are the cash cows, what are the stars, what are the last year's fashions, especially in female clothing, women's clothing, because the team needs to understand that, don't they? They need to understand what are the high volumes but very low markups, and what are the star items, the reasonable markups and reasonable volumes. That's what they should be selling, not the cash cows.
Exactly. You know, I've had clients over the years in a variety of different industries, like most accountants online today. You know, I've looked after supermarkets in the past. We know supermarkets are going to do well on perishables. They're going to turn them quick, but they're not going to do well on packaged goods and tin goods, but they've got to have them.
Yeah.
You know, the golf industry has to have apparel.
Mm.
How much do they sell? Well, that depends on the course, doesn't it?
Mm.
But holding too much of it for too long that will kill your cash flow is critical.
Mm.
Not understanding the working capital movement of each stock line is critical. When you buy it on day 0, you pay for it on day 30 or 40, and it's still sitting there on day 200 or worse. Explain to me how you're winning.
Yes, you've got a big problem.
If you're not winning, why do you continue to do the same stuff?
Mm. And this is where accountants need to be digging through the figures. It's just not a sales figure. It's really just not a gross cost of sales figure, and it's not a gross profit. They need to be digging down into them, which they would be doing if they were working as a chief financial officer or as an internal accountant in an organization. Because an organization, a CEO is not going to have their accountant just sitting there posting data all day or doing fancy profit and loss accounts. They want to know what makes the business tick. They want it analyzed.
You know what I've learned? I agree 100%, Peter, let me say. The one thing that I've learned over the years is, as you know, I've been involved with a lot of not-for-profits, with Ronald McDonald House for 26 years, the Academy of Sport in New South Wales and Central Coast for 16. Not-for-profits don't look at one line called sales. They look at management accounts. They analyse it. The treasurer's role is to communicate that to the board and other constituents.
Mm.
You know, the only reason we look at one line is because of compliance to the ATO.
That's right.
Simple, and it integrates with electronic lodgement services.
Mm.
Let that be. We've got to get back to management accounting. You know, I was talking to a group of accountants the other day. I said, how many of you guys actually split short-term and long-term debt in the accounts? And a lot of them said, oh, we do it with our bigger clients, not the smaller ones. I said, well, which ones are you going to go after with advisory? They said, all of them. I said, well, you've got a problem.
Yep.
You know, the compliance data doesn't aid the advisory process.
And they want to be careful with that approach also, because there was a court case a few years ago, a major developer who the accountants obviously had not appropriately allocated the current liability on a bank debt from the long-term liability. And the court ruled against the directors, basically claimed that the directors had to make their own decision and ignore what the accountant and the auditor had said to them.
Mm.
So, and that was all over people not correctly dissecting current liability from long-term liability. Now, I've seen numerous balance sheets produced by accountants that have no bank debt in current liabilities, yet they'll have a bank debt in long-term liabilities. That doesn't make sense, and quite frankly, it's incorrect. And if that client went and gave that balance sheet to another bank to arrange another loan and then went into liquidation, I think the accountant's going to be in real strife.
I agree 100%, Pete. You know, I mean, it's not just splitting debt. It's splitting direct and indirect costs.
Yeah.
You know, how can a business in the year 2020 not have a GP? You know, we don't have a GP because we don't have to account for it for compliance purposes. It doesn't mean we can't measure it. Okay, I'm sure the ATO isn't going to say to us, don't worry about doing it because we just need this. It's not reportable anyway. But
Mm.
at the end of the day, if I'm going to try to help them better manage their profit and I don't split direct and indirect costs, then explain to me how I can do that at the top level of profitability. But the other thing we don't do well is we don't split out interest. We don't measure EBIT, operating profit, I call it,
Mm.
to be able to see how the business is actually operating. Interest is not a cost of running a business, it's a cost of funding it and should be treated accordingly. And also throw into that assets that have never been revalued in their life. Yet we know some of them have gone up quite dramatically in value. So how truthful is our balance sheet when it comes to a wealth position?
Mm.
And then throw one other one in the mix, because I'm pretty passionate about this, Pete, and that's commercial rent, commercial salaries, where assets are owned by interrelated entities or owners are only drawing down X amount or overs. What are we trying to measure here? The first year at university when I went, which is a bloody long time ago, I've got to be honest with you, Pete, I was taught the doctrine of consistency. Never
Mm.
forgot
That's
it.
right.
If it's an overhead one year, it's an overhead the next year, irrespective of how it's been funded.
Mm.
You
And
know,
one of the things you touched on there is this whole concept, I think, of really departmentalizing the business. If they've got a business, that a company or that owns assets that are being used in the business, I think they should be put into a separate cost area and charge rent. That's what you're implying, to the operating efficiency, so that when they do their benchmark comparisons, they've got a rental figure as a lot of the other people they're benchmarking against will have, so they get a proper appreciation of how they're really performing.
if I was measuring two news agencies, say, and one news agency was heavily, entwined in debt because the owners had to borrow big time to buy it or fund it, and the other one had no debt. Explain to me how I measure that performance on net profit.
Mm. Yeah, you've got to account for it. You've got to.
We've got to start to think about, what is the information saying, not who do we report the information to.
Mm.
I've always believed as an advisory account, you're a storyteller. And every story starts with once upon a time, finishes with happily ever after, theoretically. And in the middle, there's a bit of teeth. But what story are we trying to tell? Are we trying to tell a story of tax, or are we trying to tell a story of wealth? Are we trying to tell a story of compliance, or tell a story of financial recovery post-pandemic that will get us back to an equilibrium point where we can then start to think about how do we grow? It's not numbers for numbers' sake. It's numbers to tell a story. If the numbers aren't right, good luck telling it.
Mm. And the story should be pitched to the client. It's the wealth generation story. I think that's so important. The tax office is a side issue, really. The information needs to be prepared for the client so that they got a better understanding of how their business can operate.
Couldn't agree more, my friend.
One of the other big issues, I think, is I was talking to one of our other colleagues recently, Amanda Gascoigne, and we were talking about the number of tradies that are represented in accountants' client lists. And Amanda is doing a lot of work, as you know, Mark, with small accountants and sole practitioners. And she thought it could be as high as 60%. In fact, after she thought about it, she said that in her own practice in Maitland years ago, that was probably the percentage she had of tradies. I don't think we do enough work for tradies as such. We've developed in ESS BizTools a package to calculate the appropriate charge out rate, which is based on the variables of hours worked, salaries being paid, expected productivity, the overhead expenses, the markup they're going to put on external purchases, the quantum of external purchases. Put it all together and we can determine a charge out rate. What I'm suggesting to people is that they calculate a charge out rate without the profit so that they get a break even charge out rate so that it can be discussed. I don't think enough of that's happening with tradies. They're just allowed to copy their competitor. They've got no idea how their competitor's going or what his costs are. And they just hope that at the end of the period that something will happen.
Yeah, couldn't agree more, Pete. I think, I look back on my firm in the past, we had an awful lot of tradies. And a lot of them are out there pricing on the basis of this is what I charge. They never quite worked out what their break-even point is, let alone what their margin is. But at the end of the day, it all adds up to sales going up, tax goes up. That's a problem. We've got to be smarter.
Hmm.
We've got to start to dig down to what drives a business. We've got to understand the financial levers and how hard to pull them. I've long been an advocate, Pete, of clients needing to know the financial impact of key business decisions before they make them. Not
That's
after
right. That's right.
they make them.
And that's what one of our other colleagues in our affiliates, Paul Barnaby, has coined the term predictive accounting. And I think that's a far better terminology than budgets and cash flow forecasts, because it's really saying it is an accounting role to predict the future. What's today's decision? What's today's business plan going to convert into dollars and cents in the future?
I gave up calling it budgets and cash flows because every time I did, a client said, "What do I need that for?" Or I haven't had one of those in the past. And infamously, one guy said to me, "What do I need that for? I'm still here, aren't I?"
Yeah.
I gave up calling it that because it doesn't sell.
Hmm.
Predictive analysis, like Paul's calling it, or, action planning, or, future management, call it what you will. At the end of the day, it's still a budget and cash flow. But what we're not doing well enough, in my opinion, is we're not communicating the benefit of what the services are to the clients in a manner they can follow.
Hmm.
I've always been all about trying to explain something in a non-head hurting moment. So I figure if it hurts the client's head, they don't see the value and they don't sign the proposal.
Hmm.
So I've done a lot of work with accounting firms and their staff about how to explain formulas, for example, in one sentence, in a simple way that adds value. And I think we're going to practice that stuff too.
Yes, it's all back around to communication. In fact, I notice on Accountants Daily, there's a promotion there at present for someone. I must admit it, I've printed it and I've got to have a good look at it, which is all around accountants having communication skills, being able to do what we're doing now, but also to be able to communicate to their clients what the strategies are about. I think it's very important.
I think it's critical, Pete. Heaven forbid we're now starting to talk about in 2020 soft skills, for God's sake.
Yeah.
Because none of us ever got that at university. They taught us to be technical robots and sent us into a market that loved that. It's all about compliance. It's all about clients. The ATO doesn't pay the invoice. It's about communicating. It's about questioning. It's about finding out what's important to the client. It's about delivering services in line with what the client sees as important, not us.
Hmm.
I
was a CFO in a public company, and I try to explain to people the questions that come all day. What's the answer to this? How should we do this? What can we do different? That's what goes on, I found, in a bigger organization. I think the same activity goes on in small business, but the poor old small business operator doesn't know who to ask. I think accountants need to be taking that step forward to their clients and saying, you can ring us about these issues and we will give you some input. And I think the accountants will find out a lot more then about their clients' businesses.
You know what I do, Pete? We spoke about strategic planning earlier. The one thing I did in my firm when I wanted to get more clients interested in advisory is I did complimentary, short sessions on strat planning. I sent out to the client a little SWOT analysis to be done. I said, just write me down what you're doing well, what you're not doing well, where your opportunities are, and what you think could threaten those. Simple stuff. Didn't care if I got back 3 or 4 lines. At least it was something. Gave me an insight in their mind. I sat them down for no more than an hour, preferably. Sometimes I went for an hour and a half. And we spoke about their vision, their mission, their values. We spoke about the answers in their SWOT analysis. And we developed a short, sharp action plan that needed us to help them deliver it. That's how I got advisory started, by talking strategy.
Yep,
I'm an advocate that the industry is too transactionally focused when it comes to advisory.
That's right.
I think there's some brilliant software apps out there. Don't get me wrong, much better than it was when I started 25 years ago, when there was a tool called Optimus that then became Profit Optimizer with MYOB. And everybody still went back and used what I call the accountant's love tool, which is Excel. That was the only choices. Today, there's many more choices. I think they're brilliant. I think positioning them properly is extremely effective. But I don't believe in leading off transactionally. Because once you've shown a client something, unless they can go away and actively fix it, the next time they're going to be less impressed. The third time they're going to be bored. And the fourth time, good luck if you get it. The first discussion point has to be strategic. And then we'll bring in transactional analysis when the time is right. Talk to them about their business. their goals, not just their goals in business, but in their personal lives. That could lead to a variety of other opportunities in lending, financial planning, estate planning, anything. Talk to them about, when they want to get out. Is there a succession planning opportunity? Every question I ask them is leading to a potential service opportunity that I will put into my proposal using client speak. And we've got to be better at doing that stuff. We've got to be better at questioning, at talking to clients, at explaining stuff, at customer service, at handling conflict, dealing with difficult clients, managing leading, all that sort of stuff that if you were lucky enough to do in my degree, we did one unit called management.
Yeah, that's right.
I'm not sure I've used that much over certainly the past few years, but certainly that one had a long-standing impact.
Yes. One of the other key issues looking at strategies going forward, Mark, I think is going to be how businesses are funded in 2021 and the next couple of years after that. And I think we're very fortunate that at long last in Australia, we have the opportunity now for private companies to be able to raise capital, because there's an expectation there's going to be more of them going down that path of crowdsourced funding, equity raising, or early stage innovation companies, or even raising under Section 708 of the Corporations Act. I've had a few more inquiries about that section of late, people looking at it. You got any thoughts on where we might be going?
I think, we knew before COVID that getting money from lenders was difficult, more difficult than it had been in the past. We knew after the Royal Commission that there was a lot of subsequent changes and conservatism in the lending market. I'm an advocate about accountants doing pre-lending assessments with their clients, working on how to get the banks to say yes. But I think as an accountant in practice, you've got to be considering every option. And I know, Pete, from our discussions, that when it comes to crowdsourced funding and early stage innovation companies, you've done an awful lot of work in this space, and in my mind are the expert in this space. So I think that firms who are thinking about this should be talking directly to you and having a discussion around alternate measures.
Yes, well, there's quite a lot of interest at present. In fact, last week I spoke to Matt Vitale, who's the joint managing director of Birchall, who are from Melbourne, who at this stage are leading the scorecard, if you like, with crowdsourced funding deals in Australia. He told me quite interestingly that 2020 was a better year for them than 2019.
Wow.
That they had no problems raising the investment money from their market. About 36,000 retail investors have now invested in crowdsourced funding equity raising companies. And he expects 2021 to be a bumper year because, and it's not, he wasn't really talking himself, he's talking the industry. Equitise in Sydney are the other major crowdsourced funding company, Pledge Me in Brisbane and a couple of others. There are about 11 others around Australia. We don't hear much about them, but they're saying, or Vitale is saying, he's getting heaps of inquiries. So for any of our viewers today, accountants or business operators, if you have a reasonable business and you've got a leadership team that's got an urge to get out and do things and create things of value, don't forget that if the banks won't accommodate you, or you've got no assets left to offer as security, you might be able to successfully arrange to raise capital from the public utilising crowdsourced funding equity raising. So it's worth considering.
It's a great idea, Pete. Like I said, I think everyone should have a chat to you about that.
Thank you. Okay, well, Mark, thank you for this opportunity to have this discussion with you today. And obviously, you're a director of Smith Inc. You're offering consulting services to accountants all over Australia. And we do value your time today. And from ESS BizTools point of view, we're producing the material to help accountants deliver these services to their clients all around this country. So thank you very much for your time.
Thanks very much, Pete. Always great to talk to a Queenslander. Love it.
Yeah, especially when we won't talk about the win.
Yes, yes.
Okay. Thanks, Mark. Have a great day.
Bye now.
Bye.